Hi, my name is Cha Hui Sing. Miller Merchandise is a wholesaler with headquarters in Deepdin. They sell everything from in-fat food and drinks to snack and vegetable and everything in between. This report purpose is to provide a planning audit of account payable and checking to ensure that Miller Merchandise entity audit risk can be defined, and also find evidence point out the incorrect information given by Miller Merchandise. Therefore, choose the correct audit strategy for Miller Merchandise, the entity, to minimize the time and audit risk.
Thank you, Hui Xin. Hi, my name is Ang Sao Chen. Today I would like to present about one of the assertions, which is valuation and allocations. Assertions are claims that establish whether or not financial statements are true and fairly represent in the process of auditing. Assertions are characteristics that need to be tested to ensure that financial records and disclosures are correct and appropriate. If assertions are all met for relevant transactions or balance, financial statements are appropriately recorded. There are 5 items are classified as assertions related to the ending balance in audits. They are existence, valuations and allocations, completeness, classifications, and obligations. So, what is valuation and allocations? It is that amounts at which assets, liabilities, and equities interests are valued, recorded, and disclosed are all appropriate and accurate. The reference to allocations refers to matters such as the inclusions of appropriate overhead amounts into inventory valuations. If there are incorrect amounts recorded, estimated, or disclosed in the statement, one way to test these assertions is to redo all calculations or re-record. Next, what is these assertions means as it relates to Miller Merchandise? The Miller Merchandise records transactions and business events utilizing keys entries validations. This approach can easily lead to negligence and carelessness, resulting in data being recorded or miscalculated. Next slide, we will talk about the approach to interrogating the assignment data. Since we suspect there is something wrong with the total cost data, so we need to interrogate the data in 2 significant steps to prove the problems of the total cost. So the first step is there is a row named total cost. This row amount is given by Miller Merchandise. Another row named test total cost is the row we test and find out the correct total cost. Amount through unit purchase multiplies unit cost. This way we can find out the misstatement between the old total cost and new total cost we calculate. To ensure we didn't miss any wrong total cost when we check, the second step is use Excel exact function to compare 2 test strings, and it will return true if they are the same, and false if not. So we use the total cost given by Miller and total cost that we found these 2 strings to compare. In this slide, you can see we filter out all the false total costs and find out there are 21 misstatements from a supplier called Joseph Edu. Then we use the new total cost minus old total cost to get the variance part. This also can help us test this assertion. So next I will pass to next speaker, Hui Xin.
Thank you, Sao Chen. Now I would like to share with you about the data visualization. Based on what Sao Chen just said, we can see there is an error between the actual total cost and the total cost have already recorded in the data from supplier Johnson Edu. During the audit, the valuation and allocation of account payable is critical step. There should not be mistake and misstatement if the data are appropriately valued and allocated to control the account. So we found out the main reason properly is because Miller Merchandise used the key entry validation to record account payable, and the key entry validation is controlled by the system. There are 9% error of variance between total cost and actual total cost. The system may record error due to the system degradations and cause the system to miscalculate the total cost. The second reason may be due to the employee error or negligent recording error. Therefore, to avoid this situation, Miller merchandise need to periodically check whether the system they are using is wrong or need to adapt. Or employees need to periodically check the data they are recording every time. During the preparations, perhaps control accounts are formatted and rules for how data will be changed to them are established. These guidelines specify how record will be utilized to support financial statement. In the audit plan, one of the important parts is audit strategy. The main purpose of the audit strategy is reduce audit risk while also completing the audit in a timely and efficient way. It is simple to build more specific audit plan by design and audit strategy, thereby wasting less time during the audit preparation process. A lower assessors level of control risk and a predominantly substantive approach are two potential audit strategies that represent opposite extremes of a continuum of possible audit strategy. Lower assessors level of control risk. This approach is used to test an entity internal control function, so control risk is low. Next is predominant substantive approach. This substantive focus on the substance of financial statement. So the conclusion is the valuation and allocation is recommends use the predominantly substantive approach because this assumption control risk is high. In the Miller merchandise case, Miller merchandise total costs calculated are incorrect because they use the key entry validations, so the internal control is not likely to be relied on. So that's all for our presentation. Thank you for watching it.